Thinking about buying a home, your credit score plays a crucial role in mortgage pre-approval. I'll break down what you need to know to boost your score and get that dream home. Hey, I'm John Degenhart, and this is my channel Indie Lender, where I post insightful homebuyer tips and specialize in helping clients achieve the American dream of homeownership. Your credit score is a 3-digit number that us mortgage lenders use to determine how likely you are to repay your debts. It ranges from as low as 300 to as high as 850. And the higher your credit score, the better your chances are of getting approved for a mortgage with favorable terms. Here's a quick breakdown of credit score ranges. So at the top, there's excellent, 750 to 850. You're in great shape and likely to get the best rates at that level. Good, 700 to 749. It's still a great range with competitive rates available. Kind of in the middle of the pack. Fair, 650 to 699. You might face higher interest rates, but that's still a very decent range to be in to get approved for a mortgage. Underneath this is where it gets a little bit more challenging. I would say this is probably in the poor level if you're at 600 to 649. It could be challenging, but not necessarily impossible. At the very bottom, we would say, needs improvement. If you're at a 300 to 599, I understand there may be challenges, but with the expertise I have, there are options. There are third parties I work with to help rise and boost individuals' credit score. So each situation is unique, and we take that approach to kind of specialize in your situation to help you get your credit score up. You'll need to work on improving that score regardless if your goal is to be purchasing a house in the near future. So how can you improve your credit score? Here are some tips. 1, pay your bills on time. This sounds like so simple, but this is the most important factor. Set reminders or automate payments if you need to. Number 2, reduce credit card balances. Aim to keep your balances low relative to their limit. Generally, a good rule of thumb is keeping it below a 30% balance to limit. Number 3, avoid opening new accounts. Each application can cause a small dip in your score. I see it all the time with clients. They'll go looking for a new car. A dealership may run their credit 10, 15, maybe even 20 times. Each inquiry on your credit has a huge impact, and a hard inquiry is going to stay on there for 2 full years. Number 4, check your credit report for errors. Once a year, you can get your free credit report, and you can verify anything that looks suspicious, may be fraudulent, maybe not in your name. It's a good practice to do that. Don't just rely on credit karmas and credit experts of the world. Remember, improving your credit score takes time, but it's worth the effort for the potential savings on your mortgage. Start working on these tips today, and you'll be one step closer to owning your dream home.